We're back to continue from where we left off in our last video on January 2, 2026, where price was expected to rally and form a new all-time high, as shown here on the H1 chart, a high probability buy setup worth examining. Along the way, we'll follow the twists and turns of the market to showcase the performance of our Trailblazer scalper indicator. Be sure to watch our previous videos on this phenomenal tool to follow along, if you haven't done so already. A buy signal triggered at 21:10 GMT +2 on January 2, 2026, breaking out of the previous ranging phase and sweeping the engineered liquidity highlighted in our last video. This key signal sets the stage for a potentially extensive move as the market navigates through its usual twists and turns, one you'll want to monitor closely to capture maximum potential gains and share your observations in the comments section. On Monday, January 5, 2026, a buy signal triggered at 1600 hours following a ranging phase in both the Asian and London sessions. Then came liquidity sweeps beneath the lows of both sessions, along with a shift in market structure and a rejection of the newly formed price gap on a retest of its proximal boundary. The trigger bar open indicates a sniper buy entry level, a real dynamite signal move with a negligible drawdown of just 1 point. The indicator subsequently offered a long re-entry opportunity, leading to the active buy position displayed in the trade terminal, which is currently running in profit. On the H1 chart, we see the market approaching a key zone where a reaction in price may occur, a logical level for profit taking. Be sure to monitor the entire move as the market progresses. Moments later, the market continued to rally, extending beyond the New York range high and purging liquidity, with price peaking at 2055. Shortly after, telltale signs of bearish sentiment begin to surface, with a sell signal triggering at 2140, suggesting that a pullback into a key area may occur before the resumption of the prevailing uptrend. You can also see the corresponding sell trade entry, taken to capitalize on the anticipated downward move, having identified a market gap beneath current price levels that overlap structural levels, an area toward which the market may naturally gravitate. The latest candlestick pattern on the H1 chart shows the two preceding candles being fully engulfed by the current candle, reinforcing the likelihood of a market decline. Moments later, the price decline becomes more pronounced as the market inches toward the close of the day. On the H1 chart, three preceding candles are now fully engulfed by the current candle, accompanied by a decisive downthrust into the topmost price gap. Switching back to the 5-minute chart, you can see that the 1600 hours buy signal is shown to have delivered an impressive 815-point move, with a negligible drawdown of just 1 point. We will continue to track the entire signal move as the broader dominant uptrend resumes. Short trade now exited to lock in profits. As the market reopens, the buy signal that triggered at 325 on January 6 saw a 4-point drawdown, delivering a 26-point move following liquidity sweeps into a premium zone, below the 61.8% retracement of the prior downward swing, from which further downside remains likely. The preceding sell signal now measures an impressive 166 points, with a minimal 1-point drawdown, calculated from the next bar's open, applying Sheik's strategy entry option 2. Continue monitoring this sell signal to capture the full extent of the move. The Asian session unfolded in a ranging phase, before a 136-point sell signal move drove price into a higher timeframe area of confluence, purging the session's low, along with the London range low. This extension adds further points to the initial leg of the sell signal being tracked, completing a two-leg drive into a key area. Feel free to re-examine the signal and share the entire move size in the comments. As shown here, a long entry was taken earlier after all buy setup criteria were met, preceding the buy signal that now fires at 1245. Now, this indeed calls for yet another long position to be initiated as we speak, given the high probability setup it presents, along with its strong alignment with the current market structure. This recognizable chart pattern, positioned within a higher timeframe confluence area and identified here on the 5-minute chart, speaks volumes about what is brewing for the next phase of the market. The H1 chart captures the entire sequence clearly, showing price entering a gap that overlaps a significant zone that was identified, using the look-left technique. Clear signs of a bullish flip begin to emerge, setting the stage for a potential surge in price, a juicy opportunity worth capitalizing on. True to form, a few hours later, prices are soaring like nobody's business, breaking above the London and New York range highs. The active buy positions are running in substantial profit, as reflected in the trade terminal. Now, the preceding sell signal leg that drove price into a higher timeframe confluence zone, purging the Asian and London range lows, is now measured and being annotated accordingly. That's an impressive move, to say the least. On the H1 chart, we can see how the confluence region held firmly, as price gravitates toward the previous day's high, with the potential to print a new all-time high, in line with our market outlook. The market does not move in a straight line, but instead, progresses through natural ebbs and flows. As momentum builds, we see a pullback into a price gap that overlaps a clear discount zone, a 61.8% retracement of the prior move, fueling the next leg higher. This continuation drive then takes out the previous day's high, and prints a new all-time high, exactly as projected in our analysis. At this point, we exit the active buy positions to secure profits, and continue monitoring price action for any further trade opportunities that may arise. As evidenced by the indicator's navigation guides, momentum remains to the upside, with the raging bulls refusing to budge. This warranted a re-entry buy position, which is now progressing firmly in line with the prevailing trend. Note the absence of a strong rejection as the previous day's high was breached. Price instead exhibited bullish signs, with a full candle body close above that level, an indication of potential further upside. Since a deeper retracement failed to develop, the entry was taken on the subsequent retest of the zone, forming a turncoat level that overlaps the price gap and offering an opportunity to squeeze a bit more juice out of this otherwise challenging market. We can also see substantial gains made so far in the trade terminal, reinforcing the validity of the re-entry and the strength of the ongoing bullish momentum. Buy trade now closed after an impressively extensive move. Let's mark this peak and examine this buy signal that triggered at 12:45. We see here, a 611-point move, with a minimal drawdown of just 8 points. An exceptionally clean delivery that we can now annotate accordingly. On the H1 chart, the broader structure becomes clear, with the inflection point highlighted with precision. The extension beyond the previous day's high is also fully on display, showcasing the strength of the move. Moments later, we get a further upward move beyond our marked level, following the market reopen on December 7th, with a sell signal triggering at 8:25. This sets the stage for the deeper retracement we'd been anticipating, the one that could offer a clean re-entry opportunity on the long side. With this new peak established, the preceding buy signal leg can now be updated. A staggering 678-point move, delivered right before your very eyes. The current sell signal produced 33 points by 10 o'clock, with only 1 point of drawdown. Moments later, this move extended into a 63-point retracement, sweeping the London range low. What followed was a buy signal that offered a 123-point long trade opportunity, firing at 14:50, a move later suspected to be manipulative, given its timing, having purged the liquidity resting above the London range high, and triggering an immediate rejection. This justified a short trade entry ahead of the anticipated sell signal that triggered at the next bar open, as shown in the trade terminal, illustrating our thought process during this critical phase of the session. The latest sell signal triggered at 16:35 as marked, with 2 short positions displayed in the trade terminal, both currently running in profit. The first entry was taken moments earlier at 16:33, and the second at 16:37, following the confirmation of the signal. The H1 chart provides clearer context. the liquidity purges above the swathe of consolidation stand out sharply, reinforcing the importance of allowing liquidity to be cleared before committing to a trade. Assessing the entry levels relative to the projected target zones underscores the potential magnitude of the forthcoming move this setup is poised to deliver. Moments later, we see a sweep of the New York range low, right into a price gap that overlaps a higher timeframe significant zone, suggesting a potential pullback before lower prices are seen. The 1635 sell signal has been transposed onto the H1 chart for clearer visualization, marked by the red arrow. We can see how the market plunges into this H1 price gap as well, reaching structure areas that align with the 50% level of the prior upward move, where profit-taking is warranted. We will now secure these gains at this stage, to avoid surrendering a hard-earned slice of this juicy pie, back to none other than the unsparing market. Examining the sell signal, we can see it has delivered a 307-point move so far, with a 22-point drawdown, using Sheik's strategy entry option 2 to capture the full extent of the move. Now, for the retracement leg of the downward swing, a buy entry was taken at 1755 as marked, following the formation of our familiar repeatable pattern marked in yellow, along with a drop into a discount area, all occurring within the higher timeframe confluence zone. The market then reaches this price gap which once again, overlaps the H1 price gap, where we will now exit the long position to lock in profits. Note how price rejected the equilibrium level referenced earlier, allowing a quick buy trade to be taken without overstaying your welcome. This sequence illustrates our thought process as we navigate the twists and turns of the market. We will now look to enter short sells as the downward move resumes. Here we are with 3 active re-entry sell positions currently running in profit. These were taken after identifying our repeatable pattern on the 1-minute timeframe, where the resumption of the downward move was clearly visible, with a level of granularity that may not be as obvious on timeframes above it. The market is now gravitating toward the price gap, where we can typically expect some form of rebound. Moments later, we see a further decline as the market plunges into the price gap and reaches its distal boundary, which aligns with key structural levels. This presents an ideal area to close our short positions and secure the substantial profits accumulated so far, especially with the market also edging toward the close of the trading day. We do not want any undesirable surprises. Fresh re-entry sell opportunities may develop as price guns for liquidity pools resting beneath the previous day's low, while continuing to gravitate toward the gaping gap within the discount zone, as outlined in the earlier segment of this video. If instinct counts for anything alongside solid market analysis, this is one of those moments where it proves its worth. We're now seeing a clear rejection of the zone, signaling how quickly earlier gains could have been eroded, had those short positions not been closed when they were. The initial sell entry level is marked by the red horizontal line, giving us a clear view of the full extent of the move so far, as measured from that point. Note that the subsequent short entry raked in even greater gains, thanks to the higher entry level we managed to secure during the New York Open's suspect rally. Moments later, the market reopened with a gap up, rallying into a price gap that overlapped structure levels, a move that amounted to a shallow retracement. 2 sell trade re-entries were then executed during the December 8 London session, after a drive below the Asian range low and a subsequent retest of that level, prompting an immediate price rejection, a classic turncoat response that signaled the resumption of the downward move, clearly visible on the 1-minute chart inset shown here. We see a continued decline into the price gap that overlaps a discount zone, following the breach of the previous day's low, with active sell positions currently running in profit. The market now approaches the next key structural levels where a reaction is highly probable, positioning price for a potential rally back toward a new all-time high, with all criteria aligned. True to form, the New York session drives the market down into the price gap that overlaps the previous week's high as shown in the 5-minute chart inset. We will now exit the 2 sell positions to secure the profits displayed in the trade terminal. With the hourly chart in full view, we see how the market drives deeper into the H1 price gap as well, aligning with our marked key structural levels and subsequently wicks through them, a clear rejection that produces a strong bullish flip. This is indeed a classic turncoat reaction, reinforcing our market outlook from this strong confluence zone. In the next phase, buy trade setups will take precedence, as the broader structural context which now firmly favors the prevailing upward momentum resumes, supporting the potential for an all-time high as outlined earlier. A quick look at what transpired on the 5-minute timeframe before the close of the trading day shows a buy signal emerging from the higher timeframe confluence zone, triggering at 16:35. A sell signal then followed at 20:55, before another buy signal fired at 22:35 as marked. We will now examine each trade signal and annotate the magnitude of the ensuing price delivery. Impressive moves overall. Note, this buy alert is yet another master key signal worth monitoring, to capture the full extent of the bullish move, as we anticipate a substantial continuation from this level, with price poised to accelerate decisively. Check out the channel pages to watch our debut video and all previous content on this Trailblazer Scalper indicator, where we break down the techniques in greater detail, outlining the different applicable trade entry options using the Sheik strategy. Thanks for watching. If you found this content insightful, smash the like button, comment and share this video with others. Subscribe to this channel and turn on notifications so you never miss our latest content. Explore more videos on the channel for deeper insights. See you in the next one.